Generally speaking, I'm very bullish on REITs and I invest a significant portion of my net worth in them. They essentially allow you to buy real estate at a large discount to its fair value in today's market, and I've highlighted quite a few opportunities on this channel in the past. But that doesn't mean that I'm bullish on every REIT, and in fact I've sold quite a few positions recently, and today I want to highlight two of them to you. Hey everyone, this is Jussi. I run a small investment firm that specializes in REIT investing. And before I go into this video, I wanted to quickly remind you that Seeking Alpha has recently turned on the 2-week free trial for my REIT newsletter, High Yield Landlord. So if you want to access my entire REIT portfolio, feel free to join us for a 2-week free trial. I'll put a link in the description of this video. So the first REIT I want to highlight here is called Welltower, ticker symbol WELL. This is a healthcare REIT that owns mainly senior housing and medical office buildings. I sold it recently because my capital is limited and I felt like there were better opportunities elsewhere. I first invested in this company early into the pandemic. Back then its share price had crashed with the rest of the REIT sector, and then some because the senior housing sector was going through some severe difficulties, and so the market got really scared and Welltower's share price crashed. This was a great time to buy the stock of the company because it had a strong balance sheet, it has a great management team, it has Class A assets, and so while the pain was very significant back in 2020, you could see a path to a recovery a few years down the line, and that's exactly what happened. Today, the share price of the company has largely recovered. I've roughly doubled my money since I invested in the company, and now it's priced at about 22 times FFO, which is not particularly opportunistic anymore, especially in today's market. Senior housing properties are today nicely recovering. They're enjoying strong same property NOI growth, but I fear that the market is largely pricing this already into today's stock. The company also owns some medical office buildings. Today, the largest REIT in this sector is priced at just 12 times FFO, so a 10-turn lower multiple than Welltower, which is very significant. And today at the same time, you have other healthcare REITs like Alexandria, which focuses on life science buildings, that are priced at much lower multiples. Alexandria is priced at 13 times FFO. In my opinion, it has better long-term growth prospects than Welltower. And so the choice is very simple for me between buying Welltower at 22 times FFO or Alexandria at 13 times FFO, and this is why I ultimately sold my position in Welltower. Then the second REIT I want to discuss is called Omega Healthcare Investors, ticker symbol OHI. This is also a healthcare REIT. This one invests more in skilled nursing facilities. We actually lost a bit of money on this one, so it shows you that we don't always have successful investments like Welltower. We invested in Omega in early 2021. Back then the thesis was that Omega was still discounted, but we could finally see a path to recovery from the pandemic, and with that, the fundamentals of skilled nursing operators would recover, reducing the risk of missed rent payments for Omega. But relatively shortly after investing in the company, it became clear to us that our investment thesis had weakened. New variants kept coming out, the labor costs in the healthcare sector skyrocketed, and so this put a lot of pressure on some of its operators. Fortunately, we sold our position before news came out that some of its tenants had started to miss rent payments, and to this day Omega is struggling with this problem. Today its average rent coverage ratio is only 1.1 times, which leaves very little room for error, and about 30% of its rents are coming from tenants that are not profitable. And so for this reason I fear that we could see more problems, more bad news in the coming quarter for Omega Healthcare. One of its close peers called Sabra Healthcare REIT actually recently gave a 30% rent cut to one of its biggest tenants. I fear that we may see similar rent cuts across the portfolio of Omega in the coming years, because the problem affecting these tenants appear to be structural. Perhaps the rents were set a bit too high during the good years for skilled nursing facilities. Today, with a 1.1 time rent coverage ratio and a large chunk of its tenants being unprofitable, this simply isn't sustainable. Now, despite that, Omega is not particularly cheap today. It has performed relatively well compared to the rest of the REIT sector over the past year. It's priced at a small premium to its net asset value according to our estimates. Sure, the dividend yield seems high at about 9%, but here you have to keep in mind that the REIT is overpaying what it's earning, so this is one reason for the high dividend yield. And then a second reason is simply that these are high cap rate properties. They are riskier property types, and so naturally you're gonna get a higher yield from them. So overall, I'm not convinced here that the risk reward is particularly compelling, because typically companies of the type of Omega that are going through difficulties will be priced at fairly large discounts to the net asset value, especially in today's market, and yet Omega is priced at a small premium. And so relatively speaking, compared to other REITs, I think it's unappealing, and so I sold my position. Now, if you want to learn more about what we bought with the proceeds from Welltower and Omega, feel free to join my REIT newsletter for a 2-week free trial. As I mentioned earlier, there's a 2-week free trial that's currently active. I'll put a link somewhere in the description of this video, and otherwise, if you could please like this video, that will really help me a lot. Thank you very much. I appreciate it. See you at my next one. Bye bye.